Hi, this is Kym Watson, Visa Trader. Welcome to an exclusive review of the key economic news events which are being released in the coming week. Okay, headlines really, interest rates and holidays. Let's go into a little bit more detail. Last week, really, there was some real big possibilities, and it's the week of the biggest stories, but there was so much unchanged that things really remained left the markets clueless here. Really, we had the potential some Chinese stimulus in the first half of the week, which didn't come to much beyond what had already been planned. We had the ECB price action potential, which didn't come to anything, and then of course we had the non-farm payrolls, which didn't come to anything. So really, it did leave a lot of there was certainly some periods of high volatility, but little in the way of clue of trend. So looking forward, this week it's really UK manufacturing production figure, which is probably the most important of the numbers that are coming out to me. Fed minutes, we see so much volatility around this, and generally the contents of the Fed minutes have been spoken about so much prior to the release that it can just be whippy and not really generate a lot of movement. And then interest rates, the Bank of England interest rates, I should say there. Again, I'm not expecting major things from that, but that's coming on at the moment. So Monday, no significant news events. Tuesday, a UK manufacturing production figure. We do sometimes see 20-30 pip moves around this, maybe more if we get a big move. So the manufacturing production numbers, we'll be looking at those on Tuesday. Wednesday, US FOMC minutes, as I've mentioned, it generates so little in terms of price action of late, or tradable price action, that it's a non-starter. And then we've got Thursday, we've got the UK Bank of England interest rate statement, or at least I say the statement. It's not always a statement that comes out with the release, but at 12 o'clock, which again, there's no unless there's some real statement with it and a bit of a shocker with it, then it's unlikely to move anything. And it's we sort of see 20 pip snatches of 15-20 pip snatches around about the time, sometimes before the time, and it's just not tradable, or has not been tradable. Looking ahead then at the G20 meetings, day one starts, then Friday, whole day of nothing really. US second tier PPI figure, so it's the inflation but second tier producer price index. This was, when in the good old times, a good figure to be trading, but for a long time now, since the inflation figure itself has been low, the second tier figures are not even really, don't even create a blip normally. Likewise with the consumer sentiment, it's gone really to the point where it's not giving us any movements. So finishing Friday up, well, I say finishing it up, there's also the G20 and the International Monetary Fund meeting. It's due to start on that day, but it's a very quiet week ahead. We've also got holidays, which I mentioned on the headline there, and some of the holidays, I mean, people may go away. We do see lighter volumes during the UK holiday periods, which will brush on to Europe in the next couple of weeks, within a couple of weeks of the Easter holidays, of course, themselves, but often see volumes coming out the markets and volatility drying up a little bit. Okay, I hope you have a really great one. Bye for now.